Hey everyone, this is the Trader Investor. In this video, I'm going through an entry and exit strategy with one of my students. And so I've recorded that session and going through the process, and you'll be able to enjoy how I'm thinking about it, what my approach is, whether I'm entering stocks or options. And if you have any questions, feel free to ask in the comment section. I wish you all success in your tradings, and this is going to be a very helpful tool. Enjoy this video. Okay, so now you can see me and you can see my screen.
That's correct.
All right, so first let's talk about what entry really means. So when you have a structure that you say, okay, I'm making lower low, but then here I'm making a higher high, and then I make a higher low. So at this point, you say, if I break this, I'm going to enter. So that's how you prepare for your entry. And what I mean by prepare for your entry is when you're really looking at the chart, this is what you're seeing, right? You don't have the future yet, right? If you're looking at real life data, you don't have the future yet. So if we redraw this, when price is doing this, and it makes a higher high, I think I didn't go far enough. So if you're looking at it, this is how you're looking at it. So when price is making, a higher high, like it did here, and then it made a higher low, so your low is intact. Now you know, if I break this, I'm entering. So you see this before you see the future. So you're preparing for this, and you say, okay, if it breaks this by a penny, if it breaks this by 5 pennies, whatever amount you want, you set an alert, for example, and as soon as price breaks it, you will enter. However, as you scroll then, right, as price starts to move, you notice that that structure didn't happen.
Correct.
It never broke this high, so there was no entry. So this is where patience comes into the picture. You say, okay, there was no entry. I look for my next opportunity. Where is my next opportunity? Price is making lower highs, and then finally you have from this high to this low, and then you break that high, and then you have a higher low, and now you say, okay, can I wait for price to break this as my entry, right? And then days goes by, and so now the price we wanted to break was above here. So technically you can say I'm entering here, and you would have entered a position, and that position would have stopped out, but that's okay. That's part of the system. It's not getting it right 100% of the time. It's consistently getting it right. So sometimes you'll miss it, which is okay. Which is okay if you miss it at times. What you can do to kind of minimize that is, okay, the big picture, we have this down, we broke above it, we pulled back, so this was our first sign, but then we rallied, we pulled back again, then you can say, okay, I'm going to use the second high as my entry, because I still have higher lows, right? My higher low is still intact. And so then you can do this. So that answers the first step. The second step then is, what is my exit?
Right.
After you enter, what is my exit?
Mm-hmm.
Usually your exit is determined by entry to stop. So if this is your entry,
Sure.
and this is your stop distance, which is the next logical swing area, then you want to at least double that as your exit. Now, that in theory, that's how it works. However, if you come into an area where prices, you can see a resistance, not a new high, but it has pulled back enough to where you see a resistance, you might say, well, you know what? I'm at this resistance. I see price stalling. I'm going to exit anyway. I don't have to wait for double. I've already made money. I'm going to exit. That's a perfectly fine thing to do. You don't always have to wait for that double to happen. Right? Very important to think about that.
So one second, just to clarify.
Okay.
When you said exit, let's say, so you remember we were talking about the safe side where it went pulled back and the higher low was still intact, and it retest, and we entered on the next count that showed us it was going up. Where were you saying your exit was at?
So if we measure, from entry to stop, $4.28. I want my exit to be double this, meaning $8.59. That's where my exit to be. Now, when you're near all-time highs, it's kind of tricky, right? Because price, you've seen this multiple times. It comes, makes a new high, drops, and then it makes a new high. It makes a new high, drops, and then it will make a new high. So it's kind of tricky. But when you're way down here, this is where it becomes easier to go for that double.
Yeah, that is correct. I agree with you.
Yeah. So when it's tricky, what you need to consider is look at your candlestick patterns. Look at indications that tell you, is there something in here that's indicating that maybe price wants to reverse? Right. For example, if you have this entry here at around 439.80 area, when you get 3 bearish bars in a row, that's called the 3 black soldiers. When you have 3 bearish bars in a row, that's an indication that price might be done moving up, that it might have a pullback. You never know the depth of the pullback, but at least you know you're having a pullback.
Got it.
So you might say, well, I'm going to exit at 440.73. Right? And here when we talk about entry and exit, we're not talking about options, stocks, or anything. It doesn't matter what the instrument is your entry, whether you enter stock or option, is you enter at a certain value. Right? When stock hits that price, you enter. And when stock hits either the target at the top or the target at the stop, you exit.
So, okay, so you said you just want, so is that a general rule that you want to double, like you want to double when you enter, and your exit you want to double from where you entered?
Yes.
Is that always feasible?
That's generally that's what I want to do. Now, when you're playing with options, because of the leverage that options give you, you don't always have to go for the double. You can just say, hey, if I'm getting 20%, 30% on my money, I'm good, I'm going to exit. Right? Because options expire. So it's a little bit trickier on options. But the way I want to think about it is, if I were to enter a stock position, where is the double of the stop? And so I'll exit my option when the stock price hits that level.
Right.
Right? If that makes sense to you. So when you're looking back, for example, in this area, this is where it's easier. When you're in this area where you've had a high and price has significantly dropped, and you see a possible entry, right? A possible entry here.
So,
yeah.
just speaking of this, just going back here, you see how we see the drop. Now, what would you start plotting? Like, what would be the high for this drop? Like, what would we come to plot to say, okay, we're breaking structure? We'll find the previous high.
So every time you have a high, every time you have a high, you mark it.
Yeah.
And every time you have a low, you mark it.
Got it.
And then you want to see that break of structure.
Right.
Right. Yeah. And it could be when sometimes it is necessary to use to go down to like a 15-minute chart to pinpoint, but in general, that's how you look at it.
Speaking of going to changing over time frames, I was doing that. For example, with Dogecoin, I noticed that it had the resistance at like 21.46, something like that. So it's like a two-part question for me, because I realized that it broke that resistance, but then when I missed the entry, and then it didn't stay above that resistance long before it broke back down below that area of resistance, creating a new resistance level.
So let's look at Dodge specifically and talk about exactly what you are referring to. All right, sorry about that.
No, that's completely fine.
Yeah. When you have a little one visiting you, you gotta pause and just come back to life.
Totally.
Yeah.
They are part of your world.
Yeah. Okay, so Dodge. Here's Dodge. Are we looking at hourly?
Yes.
Okay, and what specific date, so we can take a look at exactly your question.
So when I first looked at Doge, it was on the let's see if I can pull it up, because I did plot it on a chart. I don't know what happened. If it'll still be there. Let me see.
It should be there.
And for whatever reason, I usually pick Tether, like Doge. I don't know why, but I usually pick Doge versus Tether.
Yeah.
And I was putting it on a 1 hour chart.
Okay, let's see if I can bring that up for us.
So if you go to the date when I first seen the drop low, this was July 21st. So I drew the line from the low to the high from July 21st. So that was from the 16 area, 16, 17 area. Let me pull it up.
So you drew a trend line?
Yeah, I call myself drawing a trend line. So actually it was this July 20th when it dropped down to 1604.
Yeah.
Yeah. So then I did the little where it created a lower high. No.
So here.
Let me look 1 second.
So you went from here to here to here.
So I started low. Yep, but yeah. So I actually, you see where you got that arrow going up?
Yeah.
Yep, that one. So that line from the bottom to the up, yep, I did that. Then I came back there and then I went up there. Yes, that's correct.
Okay. So where was your entry?
So I didn't have an entry. I was marking on the charts and I was looking. I said, okay. So now my frame of mind was stating that if we broke that high, which you have marked off, which was the 21,346, roughly 21,4075. If we broke that, then we would enter on the next candle. And then on the 26th, it made a big move to the upside, which broke that resistance of the 21, is how I was looking at it, but I missed the entry. And then after it broke, it kind of consolidated, then eventually broke back down to the downside.
Yeah. So if you think of break of structure, if you have here high, lower high, and then we have a higher high and a higher low, would you consider entering at the break of this here instead of waiting way up here?
Yeah, I would enter, yeah, because then you'll miss the move, right?
Yeah, and two things that have happened here. This bar broke the high, and then let's see if I can get this. And then this bar here gave you a retest, right? Price went up, it retested it, and then you could have entered maybe at the high of this bar, 1810, and rode it all the way to 2021. And you ride it all the way to, double risk or resistance, right? Resistance came in at 2050, so you ride it from the 18 to 2050.
That makes sense,
right? Or your stop loss would be from your 18 area to these lows, 1659.
I had a question with that retest.
Yeah.
That retest, it tested the bar that actually broke the resistance. You see that where you had that thin line?
Yeah.
And we're pointing to the circle that you have it around. That was the bar that actually broke the resistance level. But then we came back and retest. So the retest actually tested the bar that broke the resistance.
No, you don't retest a bar. You retest your support resistance area.
Okay.
So let's see if I can zoom some more here. What you can see here is that this bar, the low of this bar came to that resistance line that I drew, which acted as support, right?
Yeah.
When you come from the above, it acts as support. When you come from below, it acts as resistance.
That's correct.
So you broke above it, you came down, tested. Tested means you're coming to test it as support. You don't close below and price doesn't continue to go down. So it came down, had a wick below it, but closed above, meaning that it's a good test. And now your entry is at the high of this bar, which is 1812 roughly. So 1812 to 1660, right? So 1820 to 1660 roughly, about $1.60 or change. So from that, if you double it, so from 1820 you add 320, it would be 2140. So 2140 is your exit, but when you're reaching a resistance, you can just say, hey, I'm not going to wait for that double because that double never happened.
Yeah.
And then I will exit my position. I think so. Trying to time it a little bit sooner, otherwise you're waiting for this break, which has made you miss this big move, because you've already broken structure here.
Yeah.
Right. So at the first sign of break of structure, you take it. At the second sign of break of structure, if you wait until way up here, it happened a few days later, but then it didn't move much, right?
Exactly.
It didn't move much. And so, let's do it in a 4 hour.
I guess that's when I started looking at it. I caught it at that particular point and started plotting it on a chart.
Yeah. So if you missed a move, it's not good to chase, because here it's not a break of structure. Here what you want is, you've missed this move. If you make a new higher low, right? If these lows continue to drive up, right? You have a low, higher, low, higher, low. Then you can enter in this area, right? You because you've missed this entry. This is your other opportunities to enter, is because you had a pullback, and you enter from that pullback. As long as you're making higher lows.
As long as you're making higher lows.
Yeah. And so if you miss this move, Then in this move, you have, here, this, you enter here, and in one bar, it broke above it for you. And it stayed up there. And when you see like an upside down hammer or something, it's time to exit.
Yeah.
Yeah.
Because it's rejecting price going any higher.
Yes. Right?
Could be an indication to the downside.
Yeah. And I'm just using the 4-hour chart just for illustrative purposes, right?
Oh.
You come down to the hourly chart, where as long as you're making higher highs, higher lows, right? You've missed this entry. Here's your higher low and here's your entry. Then this bar, did not stall. It just kept going. But then you have those 3 bearish bars indicating that you should exit.
Got it.
At least minimize your exposure, right? And exit most of your position and tighten your stop.
Okay.
Yeah.
So my question becomes, when I change the time frames, it kind of confuses me because it doesn't look the same.
So
I'll plot on an hour and try to get a confirmation on a 15.
Yeah. So what does not look the same? Can you say a little bit more?
It seems like I get lost as to where I was from the hour to the 15.
Okay.
The structure looks different.
Here's one thing that I do to help me sometimes when I get confused like that. Is, let's say I want to look from this moment forward. I just draw a vertical line to tell me where that moment is.
That's true.
And then when I change to, I'm on an hourly, right? When I change to 15 minutes, that vertical line disappears. I just zoom or scroll until I find it.
Yeah. Okay.
I think this is where you get a little bit of that confusion, right? Because the chart moves on you and you're looking at a different section. So now here I'm looking at the chart. It's the same thing. Lower high, lower high, lower high, and then higher high with a higher low. The same break of structure happen even in the lower time frame.
Okay.
Yeah.
So how do I get that vertical bar?
So in Think or Swim, in your platform, somewhere down here where it says drawing,
Got it.
right? When you click on that, there will be a time. I think they call it time. There's horizontal line, vertical line. It's near the top, right? You get the 2 columns of tools. One of them is a vertical line.
Vertical line. Yeah, I do see drawing set, different things. I just gotta find which one is the vertical line.
It's near the top, and it has a circle with a T and then a line going up, down.
Okay, got your circle with a T and line. So that's a Fibonacci.
No, higher.
So right at the top, I have a pointer, the little pan, trend, price, a circle. Okay, time level.
Yes, time level. That's the one you want.
Time level.
Yep.
Okay, so I seems like I have a better. I'm still trying to get used to TOS with navigating it. I find it just a lot bit easier to plot on TradeView for sure.
Yeah. So on TradingView, if you're using TradingView, then you just come up here to those tools, and you have trend line, vertical line, horizontal ray, horizontal line. So you have it here as a vertical line.
Vertical line, got it.
Yeah.
Okay.
And I just have it, under my favorites down here. That's why I can easily pull it up. The ones that I use frequently, I just favorite them.
Like I've been watching SMH all day. I was trying to figure out whether to exit or stay in, because I was told the month of August is going to be like a really slow kind of down, August to September, and I know it reached a high of 263. 263.74, and its resistance level was 263.83, but I wasn't sure like what to do, and now it's like declined by $3 or more. So I'm not sure, even though I know it's a long day, like a few hours I should say, into the trading day, but I just didn't know how to like works that. So I don't really have an exit strategy.
Yeah. So one is, what was your entry? I think the critical thing to look at is, what was your entry?
When I first got in, I think it was 223. The stock was trading at 223, or the ETF was trading at 223. I believe when I first got in back in March.
Okay, so you got in at a pretty good level somewhere here. So that's where you got in. And what was, when you first got in, what was your goal?
What was the who?
What was your goal?
Well, that's the thing. So that's when I first started learning. So it was back in March when the market went through a lot of everything in tech. So that was when me first learning. So I did not have it. I always was told, buy at the support. I think that it was at support. So that's what was one reason that caused me to jump in. Did not have an exit strategy. It's a leap contract. So expiration is 2022 in January. So I don't have a goal. I guess my goal is to see at least 100%. I don't think I've gotten there though.
So how far, what's your percent gain? Usually, I mean, things in this market volatility, I don't always go for 100%. If I have a nice gain, like from 223 to 260 right now, that's a pretty decent move. If I have 30% or better, I'm exiting.
I don't think I have even 30% though, because so I don't really know how to look at this percentage wise. So this is what I look at. They said they're valuing the contract at $4,207.50, right? I paid for all three of them $3,396. So I subtract the difference of the two.
So you paid 3,300?
No, 3,900.
Okay, you paid. So let's just say roughly 4,000. And what is the value today?
It's only 4,207.
So you're up 5%.
Yeah.
Right? You're up 5%. But at any point, were you up more than 5%?
At any point, exactly. I was. In hindsight, I'm thinking back when it first hit a certain level, I'm starting to believe like that's probably the highest this contract probably was going to ever go. Because the more it goes down, which someone says, it has to move it a lot more. Like when it first hit 257, I think that was the time when it first hit 257 from March until when it first hit 257. That should have been in May, right?
Yeah.
When it first, I think that was the most probably the contract probably would have seen.
Yeah, and so that's why you get in trouble when you are the longer you wait. Of course, this is a leaps, so you have time working for you, but still, I think it's good to have a strategy that says, hey, here's what I'm entering and here's what I'm exiting. And if your exit is 100%, that's fine, but know that your risk is $4,000. Right. So be aware of that risk. Yeah. Be aware of that risk.
I've seen some. I've gotten. So that's what I'm trying to do now moving forward. No more executing as far as real money. It's just really understanding and finding my edge and understanding what I'm doing. Because right now I forgot about the other 3 contracts that I had in ARC, which have just gotten murdered in the street. So well down over 50%. So
that's why take it slow. You don't have to recover all your money in one trade. Just take it slow, and as you improve on your execution, you can start adding position size. There's nothing wrong with doing just one contract at a time. There's nothing wrong with selecting stocks that are less than $100, because when you're doing these big contracts like SMH, they can get pricey.
For sure.
And to really develop your skills, just stick with one ticker, SPY. Just stick with SPY. SPY will give you everything that you need to learn.
I hear that.
Everything.
Okay.
Yeah. And the spread is tight. They trade at every dollar level, so you have a lot of room with SPYs to make decent amount of money, to learn, and and also risk very little because their option prices are decent.
Yeah. So I'm just a little confirmation on actually understanding. So I know the Fibonacci, which is another tool in itself, but I know that kind of gives you automatically like your profit targets on there. So without using that, I was just trying to confirm, because what happens when you set a target and then the stop doesn't reach it, but you get some gains? How do you know, like, when I guess I'm still kind of struggling with understanding when to effectively exit.
So the way I look at it, there are a few things that I look at. I draw a Fibonacci from recent swing high to low, and my first target is always the 1.272% extension. So if price reaches that, I'm exiting, no questions asked, right? That's my target one. Yeah. Now, if price goes there but is struggling, right? It goes there, comes back. It goes there, comes back. It goes there and is struggling. I exit, because I don't want to baby this position.
Yeah.
Right. What I want to see is, as soon as I enter, I want price to do this and immediately go there. If it's doing too much of this, it's too much of an unknown, and time is going to eat away at my option price, I'm exiting.
That is true, because I've learned, I've witnessed, the more it consolidates, it usually ends up breaking down.
Yeah, exactly.
At a certain level.
Exactly.
Okay, so I guess it's really just practice until I start seeing things. I know no strategy wins all the time, but really just trying to find my edge in the market, and still understanding risk to reward ratios. I think that's pretty crucial. But I was gonna use. I feel comfortable with using like the ATR.
Yeah.
Because I think I understand that, how to navigate that. So basically, one level below the low of that stop. So if it's like a support, you'll subtract whatever that they say in the ATR is.
Yeah.
For that time frame, subtract it from the low to get your stop loss and put it there. So I feel comfortable with that.
There's a couple of ways to think about that. If, let's say, this bar here, right, today, let's say you're entering today, the first 15-minute bar, this is as soon as price opens, and you take the low of that bar, and you say, okay, I do 1.5 ATR below this bar is my stop, right? That's one way to think about it. For me, I find it easier to find a logical area where price could find support, and that logical area is this turning point, right? The last higher low from previous lows, the last higher low, I use that as a logical area to be stopped out.
Yeah.
Right? If you had entered up here, this low would have been a logical area, and we're not stopped out, right? Now it's working towards there, but we're not stopped out. So the ATR might get you, might reduce your risk. It might appear to reduce your risk, but I have a feeling, and based on my experience, the ATR gets me out of positions a little too quickly.
Okay.
Yeah.
I understand that. And then I also understand what you just said too about using the price action to determine your stop loss. Basically saying if it comes back to a certain level, the structure is broken, and it's or it's not, or the trade is invalidated, I should say.
Yeah, the trade is invalidated
to a certain level.
Yeah.
So I do get that. So I've been studying a lot to where I can effectively, talk about it and understand exactly what's going on.
Yeah.
It's just that the execution part, and I think the execution is when I come basically face my fears and get in there and just practice. I just need to get used to marking up charts and understanding what I'm marking up, already having a plan, as everybody has constantly, repeatedly said before placing trades, so you have something to follow and you're not just in the market hoping and wishing something goes a certain way that it doesn't.
So do this.
Mm-hmm.
Don't go to on demand. Go to paper trade in Thinkorswim
Got it.
and take trades. Continuously take trades, but every trade journal it.
Yes.
Here's why I enter. Here's my entry price. Here's my stop loss. Here's my exit. Every trade, take a screenshot and put it in that journal. Every trade, and then every 20 trades, assess.
Got it.
Don't worry about assessing before you get to 20 trades. Win or lose, just do 20 trades, and then assess. Why was this trade right? Why was this wrong? If you have more right than wrong, fantastic.
Mm-hmm.
If it's the other way around, then you need to refine your entries, your strategy.
Mm-hmm.
If you have 50-50, you might need to refine. Or if your gain is more than your loss, then you'll be fine. So my homework assignment to you, if you choose to accept, is go to paper trade, journal, do 20 trades, journal 20 trades, and then let's meet again and go over your 20 trades and analyze together. That you will walk me through. You'll be my teacher of your 20 trades and say, hey, here's why I'm entering here, and here's what happened with that position.
Got it.
And so 20 trades, if just do SPY, don't do anything else, just do SPY.
Okay.
20 trades, and 20 trades could be 20 days, it could be 30 days, or it could be 10 days, depending on how many trades you take. But just do those, and then let's come back and have a discussion.
Let me ask you a question.
Sure.
So is paper trading the same thing as if I'm in the live market, meaning I can use the indexes and all the news and stuff to be able to effectively trade that day?
Yeah.
Perfect. Okay, perfect. Okay, I like the sound of that. I'm going to do that.
Okay.
All right. Well, as always, you've been a blessing. I pray that it comes back to you tenfold. I thank you so much for your time and effort, and I truly believe in consistency, effort, and intentionality that this will eventually start to yield some good results.
Yes, it will. Patience. I think the most important thing is patience, and that's what you're showing. The last few months that we've been working together, you have not rushed to enter new trades. All the money you lost, consider it as learning. Like that's part of your education. It's like paying for college. But moving forward, we're going to minimize those losses and maximize your gains.
Absolutely, and I received that. I'm all on that task, and I accept the challenge. Thank you so much for just being patient with me as well.
Of course, and let me know if I can do anything in between before we meet.
Absolutely, sounds good. I'll definitely look forward to journeying those trades and analyzing them and giving some feedback.
All right.
All right, thank you so much.
You're welcome.
Appreciate you.
Take care and be blessed.
Okay, God bless you as well. You and your family. Have a good weekend.
Thank you. You too.
All right, bye.